Welcome to the More Realtors Weekly St. Louis Real Estate Market Update. I'm Dennis Norman, one of the brokers at More, and if you'll give me a few minutes of your time, I'll bring you up to date on what's happening in the St. Louis real estate market. Let's jump right in with the real estate news. Here are some of the headlines from this week from stlouisrealestatenews.com, St. Louis's best local source of news and information on the St. Louis real estate market. That's stlouisrealestatenews.com. The articles this week included an article about a poll that shows that homeowners are not happy with their mortgage servicers, and their satisfaction has declined in 2011 from 2010. Another article from the National Association, or a report from the National Association of Realtors, showing existing home sales dropped in July, and also the actual home sales for this year are down about 5% from the same time last year. An article, helpful article here from a local mortgage broker about information that you need when applying for a home mortgage, as well as an update on St. Louis mortgage interest rates. And finally, another one of the headlines from this week is an article based on a report from Trulia that shows that buying a home is more affordable than renting in 3 out of 4 major cities across the U.S. Now we're going to jump into the data for the market this week. The first 3 slides I'm going to show here are based upon the St. Louis metropolitan area as a whole, so the St. Louis MSA. And the first one here is our real-time market profile. And again, for the St. Louis MSA, you'll see that the median home prices have stayed about the same at $184,000. Average days on market is 110. I believe last week was 109, pretty much the same. Asking price per square foot has been stuck around 100 for a while, it's 99. And if we come down here to the trademarked market action index, it is a 12, which is cold market, a buyer's market. A quick reminder here, 30 would be a perfectly balanced market, not favoring buyers or sellers. The higher you go above 30, up to 60, would be a hotter market and favoring sellers. The lower it gets down towards 0, the colder the market is and the more it favors buyers. Not a shocker, it's a buyer's market right now. This next chart, this shows the history of the market action index since we began keeping it, which was a little over 3 years ago. And you can see here it's bounced around. It's hit a peak of about 16.5, a low of almost 11.5. Peaked here over the winter and has been kind of dropping since, but it's sort of been bouncing around the same level here for the summer. But clearly, as you can see, for the past 3 years, it has not even come close to getting out of the buyer's market range. This next chart, again, for the St. Louis metropolitan area, this shows median price trend over the past year. The orange line is a 90-day average of median home prices, so it's going to be a little smoother, show the long-term trend. The black line is a 7-day average of median home prices, so it's going to be more jagged and quicker to show where the trend is headed. And we can see the trend was down, then in the winter here bottoming out, and has been on the increase. But as the 7-day average is showing here, the last couple of weeks it has been trending downward. Now we can see the longer term outlook, our average, the 90-day one, is starting to trend down too. Now the next charts, all the rest of the data is going to be based upon a closer in core St. Louis market, the St. Louis 5-county area, which encompasses the majority of the business in the area. It is the city of St. Louis County, St. Charles County, Jefferson County, and Franklin County, data for these markets combined. And this first chart here shows the number of sales and average sales price for this 5-county area for the past year. The blue bars show the number of sales. We can see that peaked back here in June, dropped somewhat in July, and obviously August we're still in the just past the middle of the month, so it'll be a while before we see that. And the green line is the average sales price, and we can see that's actually trended up through the summer and has been on the rise here. This next chart here shows the median home sales prices, so what they're selling for, as well as the median number of days it took for those homes to sell. This is for the past 12 months. The green line represents the sales prices, blue the time it took to sell. And we can see, again, this is for the 5-county area, we can see starting back here in winter, March, around the end of March, right around my birthday, prices started going up, and they pretty much continued upward, and we can see indications for June is that the prices are higher. It's taken us up to about, looks like the 140 something thousand mark for median price, maybe almost 150,000, which is up from just slightly below 120,000 back in March. Days on market has dropped, dipped down considerably below 60. Has slowly been back on the rise though, and is now above 60. If we look at the same data just year to date, we can see it a little more pronounced here. Days on market definitely were dropping. They've increased a little bit. Home prices have been increasing as well. This next chart is a chart that shows the ratio of the and the relationship of the sales price of the home at the time it sold to what it was listed at, both at the time it sold as well as what it was originally listed at. And we can see here the green line represents the sales price to the original list price. The blue line represents sales price to what it was listed for at the time of the sale. And this is not an indication of market value. This is more an indication of the market itself in terms of knowledge of the market by the sellers and the listing agents, and this is more an indicator of how good a job are the listing agents doing out there pricing these homes accordingly for the market, so they're actually coming out on the market at a price that is commensurate with what the true value is at that time, and not setting on the market and ultimately having to continue to lower the price until they get to the current value. And as you can see here, the blue line, the sales price to what it was listed for at the time of sale, has been bouncing around. It's been well below 80 for several months, and then in May or June, somewhere around there, went above 80%, started getting up, hit 90% in July. Now for August so far it's showing in excess of 100%. That's due to there not being a lot of sold data entered yet for August, and clearly some overbids. Some of the short sales and some other property comes out is priced so attractively. Many times there are bids in excess of the asking price. And we see the green line, sales price to the original list price, hit about 80%, dipped to 70 in July, and now it's back on the rise too. But this is why, particularly in a market like this where home prices have been trending downward and are projected to go down a little bit more yet, it's so important that sellers come out on the market priced accurate to start with. Here's the same chart, just year to date, a little more clear. Because if you don't come out priced right, every day you're on the market, potentially your home's worth less money. And back in the boom, you could get away with that. You could overprice it, and even if it's overpriced, heck, just sit there, let it sit on the market 6, 8 months, maybe a year, and eventually the value would catch up with what the price was. Here it doesn't work that way. I've shown it many times, examples to bankers and others to show that what has happened in the 8 or 10 months that their house set on the market, the home prices in the area decreased by 5 or 6%. So this is why it's important to have the resources like what we have at More Realtors, and the brokers and agents that know how to use these resources and understand the market and study the market, and also are confident enough in their ability to sit across from a seller and tell them what they need to do price-wise, because you don't want to come out in this market overpriced. It's a very unforgiving market in that regard. This next chart, this is a chart that shows what the listing inventory has been, as well as the number of expired listings over the past year. The listing inventory is one of the things that's been hurting the market, as there's just so much inventory out there. The green line represents, based upon the sales pace at that period, how many months of inventory there was for any given month. We can see in the winter that hit, I don't know, maybe 90 months here, quite a long period. It's dropped down to as low as maybe 40 something months of supply back in June. Has increased back up to about 60 in July, and for August, again, this is a little early to really get a look at August, but it's trending upward. A good healthy market would be a 6 or 8 month supply, so you can see we're not even close to having a healthy supply. The blue shows listings that are expiring, that have expired, that without being sold or renewed, and that is at the 4,000 mark for August, and just a lot of listings expiring without selling. This here shows a longer term look at the market. This is shows the list price and sales price trend for the St. Louis 5-county area over a 10-year period. Blue line is the median list price of all the homes on the market. The green line is the median sales price of what homes sold for. And you can see everything peaked in 06. Everything's been downward since. And what's interesting here as far as sales prices go, if I could draw a line across here, we are just about at that median sales price point as it was in 01, probably a little higher than that, very close to 02. So somewhere in here, I mean, basically the prices are back to about where they were 9 years ago. This is the same data for the past year, and you can just see it a little closer. Now what I've given you here is a snapshot, a very quick look at the overall St. Louis market. At More Realtors, we have tons of resources. We have proprietary data that no other realtor in St. Louis has. We have charts that we prepare. We study the data and we know the data. Myself and my business partner John Williams have both been in the business. In spite of our youthful appearance there in our pictures, we've both been in the business a long time. I got in the business in the real estate industry actually before I was 18 years old. So I've been in it over 32 years. John's been in it for over 26 years. We built a team, and we have the technology and the resources that really help us help buyers, sellers, investors in the market, help you understand the market, know the market. We both bring different skill sets. John is literally a guru when it comes to technology and marketing and using new forms of media and technology for marketing. John was doing setting records and volume, sales volume back in the late 90s, and using the internet before people really had much of a clue of what was going on with the internet for marketing. And I've had a ton of experience in the industry from a variety of angles, from the brokerage side, but from the investor side, buying and selling thousands of homes in the St. Louis area as a developer, developing new homes. Got some real strengths in understanding the market itself, the legal side of things, and negotiating strategies and skills. So we take these tools, we train others, who trade agents outside of our company and within our company, and but we're here to help you. What's shown here is just a small sampling. Like these charts have been showing you, we have charts available for every city throughout the St. Louis metropolitan area. These are real-time charts you can subscribe to if you want to stay up to date on what's going on in your market. You can check that out at our company website, which is mo-re.com. MO like Missouri, -RE like real estate.com. That's where you can sign up for charts and data. Also to the right here you see a little sampling of our newsletter. We have a monthly newsletter. It's not one of these canned newsletters like a lot of people send out with generic data. That doesn't mean a thing. This is a newsletter that we prepare. It's all based upon, it's all original. It's based upon St. Louis market data and St. Louis information. You can sign up for that on our website as well. You can contact us by telephone. We still use telephones too, although we have a virtual PBX system, of course. Our phone number is 314-414-6000, or you can contact John or I, either one directly, Dennis at mo-re.com or John at mo-re.com. And finally, here's a little legal stuff in the small fine print. Read that at your leisure and enjoy it. That'll keep our attorneys happy. And that's it. I thank you for joining me this week. I'll be back next week. I hope you have a great week, and God bless you.